Hello, welcome to today's topic, Germany's new economic strategy. Germany has Europe's strongest industrial economy. It exports cars, machines, and chemicals to the world. The magic formula was to import cheap Russian energy to satisfy Chinese manufacturing demand being under American military protection and sell goods to the European market. Unfortunately, the scenario has changed. Germany's old economic model was not at its best. Russia became a geopolitical risk. China became a competitor with high-quality products. But less pricier energy prices exploded. Factories started to relocate where they could get cheap energy. Now Berlin has to change its strategy. Many people are not understanding it. Nevertheless, the shift is underway. Germany is quietly rebuilding its economic future toward Eastern Europe. New supply chains and strategic industrial alliances. Can Germany succeed? Or is it entering the most dangerous economic transition since reunification? For years, Germany was considered the engine of Europe. Companies like Volkswagen, BMW, Siemens, and BASF dominated global markets through engineering excellence and industrial efficiency. Germany built its economic strategy on affordable energy from Russia, massive export demand from China, deep integration with European manufacturing networks. This system worked and provided huge wealth to the country. Now, Germany has to pay high energy costs, face slowing growth, labor shortages, geopolitical uncertainty, and more global competitors are selling their products at better prices, and instead of correcting what made the country successful, Germany is building another strategy this time. The model focuses on Eastern Europe, strategic manufacturing relocation, industrial resilience, defense production, supply chain diversification, and economic security. This shift could show a new Germany, and also where Europe is heading. Section 1. The old German economic success. Export of reliable goods made Germany rich. Manufacturing of high-quality products built Germany's reputation. Industrial excellence made the reputation of this country worldwide. We can name some breakthroughs: precision engineering, industrial specialization, strong vocational training, advanced infrastructure, and powerful mid-sized industrial companies after the Cold War and the deployment of globalization. Germany gained access to low-cost Eastern European labor, expanding EU markets, Russian natural gas, and China's massive industrial boom. This was a near-perfect system. Eastern European workers were hired at low cost. Germany could produce goods at competitive prices. Germany was dominant and richer compared to other European countries. Geopolitics of the last 4 years has changed the equation. Section 2. The Russia shock changed everything. The war in Ukraine changed the dynamic. Russian gas was fundamental to control production costs. Russian gas was important to power factories, chemicals, steel, heavy industry, and manufacturing exports. But after the energy crisis, gas prices surged. Industrial costs exploded, inflation rose sharply, and energy-intensive industries came under pressure. Companies realized that Germany was no more the ideal location if they wanted to be competitive. This is a vulnerability to Germany's industry. Germany also realized that overdependence on China created another major risk. Some industries reduced production, others explored relocation. Some investments moved abroad entirely. Section 3. China, a partner or competitor. For years, China was Germany's growth engine. German automakers sold millions of vehicles there. Industrial machinery exports surged. Luxury manufacturing expanded. The relationship was reversing. China is no longer only a customer, but a direct industrial competitor. Chinese firms dominate electric vehicles, batteries, solar technology, industrial manufacturing, and advanced supply chains. German companies are facing pressure in sectors they once controlled. At the same time, geopolitical tensions between China, Europe, and the United States are rising. Germany suddenly finds itself trapped between economic dependence on China, security alignment with the United States, and industrial competition from both sides. This has pushed Berlin toward a new strategy: reduce strategic vulnerabilities without completely abandoning globalization. And this is where Eastern Europe becomes critical. Section 4. Germany's quiet shift east. Germany is reinforcing its industrial capacity with Eastern Europe. Supply chain networks are being built with Eastern countries to sustain Germany's industry. Germany is regionalizing instead of globalizing. Those are two distinct economic strategies. Some key countries involved in Germany's economic regionalization are Poland, Czech Republic, Hungary, Romania, and Slovakia. What are they offering? Lower labor costs, strategic geographic proximity, EU market access, growing industrial capabilities, and reduced geopolitical exposure compared to Asia. The purpose is to create shorter, safer, and more resilient industrial systems. This is a strategy to build within Europe an industrial bloc. This is an economic transformation with regionalization. This includes nearshoring manufacturing, diversifying suppliers, investing in defense production, strengthening transportation corridors, and reducing dependency on unstable external actors. Section 5. Defense, industry, and strategic autonomy. Another major transformation is happening. Germany is rethinking defense and industrial policy together. Germany prioritized economic integration over military expansion. Geopolitical instability has changed the conversation. Berlin is investing in defense, industrial security, critical infrastructure, semiconductor, and strategic technologies. This creates a new industrial dynamic. Defense spending increasingly supports advanced manufacturing, engineering, electronics, logistics, artificial intelligence systems, and industrial innovation. Germany is beginning to treat economic security as national security, and that changes how supply chains are designed. Instead of focusing only on efficiency and low cost, Germany is increasingly prioritizing resilience, as well the redundancy and strategic control. Section 6. What could be the risks of this new strategy? This new shift will encounter challenges. Germany is walking on a tortuous and perilous line: high energy costs, aging infrastructure, demographic decline, industrial competition from China, rising US protectionism, and slower economic growth. For now, Germany's moves are slow. Competing with China and the United States will be a hard task. The world is also reorganizing into geopolitical blocs. One side has a dynamic population and another one an aging population. How will Germany navigate through those blocs? The country must now answer difficult questions. Can Europe remain industrially competitive? Can Germany reinvent itself fast enough? Can regional supply chains replace global efficiency? And can Europe maintain economic power in an increasingly divided world? Conclusion: Germany's economic transformation is bigger than most people realize. It's not only an issue of energy, Russia, or China challenges. It's about economic transformation. Germany is trying to find solutions to various hurdles. It needs to boost a competitive industrial network. The world is becoming less stable, less globalized, and more geopolitical. And Germany needs to find its way in this new environment. Germany is no longer operating in the predictable world that made it rich. It is entering a new era where economics, geopolitics, energy, defense, and supply chains are becoming inseparable. Europe will follow its steps if Germany overcomes current difficulties. Thank you for your attention. Please support our work by liking, commenting, and subscribing to this channel. Please watch the next video I selected for you at the end of this page.